A financial colossus with trillions under its control, Blackstone's ascent into the pinnacle of the investment world is a reflection of the unwavering ambition and strategic brilliance of its leader, Stephen A. Schwarzman. But behind the towering skyscrapers and multi-billion-dollar deals lies a story of ambition, controversy, and an unrelenting pursuit of profit. This is the story of Blackstone. A tale of how one firm reshaped the financial landscape and the man who built an empire. In the world of finance, few names command as much respect and inspire as much awe and debate as Blackstone. From its modest beginnings in 1985 as a two-person mergers and acquisitions boutique, the firm has evolved into a colossal investment behemoth. It manages trillions of dollars in assets across a vast spectrum of industries, yet the heart of this empire beats to the rhythm of one man's relentless ambition and strategic brilliance. Stephen A. Schwarzman. Born the son of a dry goods store owner in 1947 in Philadelphia, Schwarzman displayed an early entrepreneurial spirit. As a teenager, he launched a lawn mowing business. He employed his twin brothers and showcased a knack for identifying opportunity and marshaling resources. His academic journey eventually led him to Yale University. Here, he delved into the social sciences and became a member of the prestigious Skull and Bones Secret Society. After graduating, he served a brief stint in the U.S. Army Reserve. After that, he enrolled at Harvard Business School, where he honed his financial acumen and sharpened his deal-making instincts. Schwarzman's career began at Lehman Brothers. He quickly rose through the ranks, and for the first time, his ambition and drive were evident to those around him. He had an insatiable appetite for knowledge and a burning desire to succeed. These traits served Schwarzman well when he co-founded Blackstone with Peter G. Peterson in 1985. His leadership and vision quickly propelled the firm forward. He possessed a keen eye for undervalued assets and an uncanny ability to structure complex deals. As Blackstone's portfolio grew, so did Schwarzman's reputation as a master dealmaker. His success, however, is not solely attributable to his financial acumen. He is known for his charisma, charm, and ability to cultivate relationships with powerful figures in business and politics. He regularly hosts lavish parties and events and rubs shoulders with A-list celebrities and global leaders. His network of contacts is vast. It spans continents and industries. This combination of financial prowess, strategic vision, and interpersonal skills has made Schwarzman one of the most influential figures in finance. But his impact extends beyond Blackstone. He has also become a prominent philanthropist and advisor to governments and organizations. Schwarzman has pledged to donate the majority of his wealth to philanthropic causes, specifically focused on education, cultural initiatives, and global leadership development. Chapter 2: Building an Empire. Blackstone's origin story is one of audacious ambition and calculated risk. It all started in 1985. Armed with only $400,000 in seed capital and a shared vision of reshaping the financial landscape, Stephen A. Schwarzman and Peter G. Peterson, a former U.S. Secretary of Commerce, laid the cornerstone for what would become a global investment powerhouse. Initially, Blackstone operated as a mergers and acquisitions advisory firm. The company leveraged Schwarzman's deal-making expertise and Peterson's extensive network in the corporate and political spheres. The firm's early years were marked by a series of successful transactions. These include the landmark $1.5 billion leveraged buyout of the supermarket chain Safeway stores back in 1986. The deal not only generated significant returns for Blackstone, but also established its reputation as a formidable player in the M&A arena. However, Schwarzman's ambition extended far beyond the confines of advisory work. He envisioned Blackstone as a diversified investment platform, capable of deploying capital across a wide array of asset classes. In the late 1980s, the firm began expanding into real estate. It acquired distressed properties and transformed them into lucrative investments. Blackstone's foray into real estate proved to be a turning point. This move laid the foundation for the firm's future dominance in the sector. Schwarzman's leadership style was instrumental in shaping Blackstone's evolution. He fostered a culture of meritocracy and intellectual rigor. This was essential to attract top talent from diverse backgrounds. He encouraged independent thinking and rewarded initiative, but he always maintained a firm grip on the firm's strategic direction. His mantra, "Don't lose money," became a guiding principle and instilled a sense of discipline and risk aversion in the firm's investment approach. The 1990s saw Blackstone's continued expansion into new asset classes, including private equity, credit, and hedge funds. The firm's investment strategies proved remarkably successful. Schwarzman's ability to identify emerging trends and capitalize on market dislocations was evident in the firm's investments in sectors ranging from energy and infrastructure to technology and media. Several landmark deals solidified Blackstone's reputation as a global investment powerhouse. In 2007, the firm acquired Hilton Hotels Corporation for $26 billion. This deal made it the largest hotel operator in the world. Schwarzman saw the potential for value creation in the hospitality industry despite the looming financial crisis. Another notable deal was Blackstone's acquisition of Equity Office Properties Trust. This was the largest leveraged buyout in history at the time. This transaction further cemented Blackstone's dominance in the real estate market and showcased its ability to execute complex deals on a global scale. By the early 2000s, Blackstone had established itself as a leading alternative asset manager. The company's portfolio was diversified and had a firm global reach. Chapter 3: Navigating Controversy. Blackstone's meteoric rise has not been without its share of controversy. As the firm's influence and reach have grown, so too has the scrutiny of its practices and impact. Blackstone, like many other large investment firms, has faced criticism across several fronts. This has particularly been around its real estate holdings, its perceived influence across industries, and the firm's compensation structures. One of the most prominent criticisms leveled against Blackstone is its role in the rising cost of housing. The firm's vast real estate portfolio, which includes single-family homes, apartment complexes, and commercial properties, has been accused of contributing to the shortage of affordable housing. Critics argue that Blackstone's focus on maximizing returns for its investors has led to rent increases and evictions. Blackstone has responded to these criticisms by highlighting its investments in affordable housing initiatives and its commitment to responsible property management. The firm has emphasized its efforts to maintain affordable rents, invest in property renovations, and partner with local communities to address housing needs. Blackstone's vast holdings in diverse sectors, from healthcare and energy to media and technology, have raised concerns about its influence over these industries. Critics argue that the firm's financial clout and ownership stakes give it undue power to shape corporate decision-making. The biggest concern is that it could potentially prioritize profit over broader social and environmental concerns. But Blackstone has emphasized its role as a long-term investor. The firm is committed to sustainable growth and success of its portfolio companies. It has also highlighted its track record of responsible ownership, citing examples of investments that have created jobs, fostered innovation, and contributed to economic growth. Blackstone's fee structure, which includes management fees and performance fees, has also attracted scrutiny. Critics argue that these fees are excessive and disproportionately benefit the firm's executives and investors, and they've raised red flags around potentially shortchanging clients and beneficiaries. According to Blackstone, its fee structure is in line with industry standards and reflects the value it provides to investors. The firm has pointed to its consistent track record of generating strong returns and its commitment to transparency and accountability in its fee disclosures. Blackstone has also faced criticism for its investments in companies with questionable environmental and social practices. These investments include fossil fuel producers and private prison operators. In response, the firm has emphasized its commitment to environmental, social, and governance factors in its investment decisions. However, the debate over the firm's role and responsibilities in the global economy is likely to continue as it navigates the challenges and opportunities of the 21st century. Chapter 4. Blackstone Today. Today, Blackstone's reach extends across continents and encompasses a diverse array of asset classes, solidifying its position as the world's largest alternative asset manager. The firm boasts a staggering $1 trillion in assets under management. This immense capital pool is deployed across a broad spectrum of investment strategies. The firm's private equity arm focuses on acquiring and transforming businesses across various sectors, from healthcare and technology to consumer goods and industrial services. The firm's private equity portfolio includes some of the world's most iconic brands and companies. Blackstone is a dominant force in the global real estate market. It owns and operates a vast portfolio of commercial, residential, and industrial properties. Its real estate investments span the globe, from prime office buildings in major cities to sprawling logistics centers and residential communities. Blackstone's credit platform provides financing solutions to businesses and governments worldwide. The firm's credit investments include corporate loans, real estate debt, and structured credit products. The firm's hedge fund platform offers investors access to a diverse range of strategies, including long-short equity, credit, and event-driven. The firm's hedge funds are managed by experienced investment professionals with a track record of generating strong returns. Blackstone's portfolio reads like a who's who of global business. Some of its notable investments include Refinitiv, a leading provider of financial market data and infrastructure; Merlin Entertainments, the world's second-largest visitor attraction operator; and Gates Industrial Corporation plc, a global manufacturer of power transmission and fluid power solutions. Blackstone's leadership group is a blend of seasoned veterans and rising stars. Everyone is committed to upholding the firm's legacy of excellence. Stephen A. Schwarzman remains at the helm as chairman and CEO. He provides strategic guidance and vision. John Gray, the firm's president and chief operating officer, oversees day-to-day operations. He's widely regarded as Schwarzman's heir apparent. Other key executives include Joseph Baratta, global head of private equity; Kenneth Kaplan, global head of real estate; and Dwight Scott, global head of credit. Blackstone's recent performance has been nothing short of stellar. The firm's financial metrics are a reflection of its disciplined investment approach and ability to generate consistent value for its investors. Despite Blackstone's immense size and complexity, Stephen A. Schwarzman remains deeply involved in the firm's operations. He continues to provide strategic direction, mentor the next generation of leaders, and represent the firm on the global stage. Blackstone's future is inextricably linked to the evolving landscape of the global investment industry. Several key trends and challenges are poised to shape the firm's trajectory in the years to come. The alternative asset management industry is becoming increasingly crowded. Blackstone will need to continue innovating and differentiating itself to maintain its competitive edge. Regulatory frameworks are tightened globally, and there is an increased focus on transparency, risk management, and investor protection. Blackstone will need to navigate this complex regulatory landscape while ensuring compliance and maintaining its reputation. Investors are increasingly demanding that their investments align with their values, and here there is a growing emphasis on ESG factors. Blackstone will need to demonstrate its commitment to sustainable and responsible investing to attract and retain capital. Technological advancements such as artificial intelligence and blockchain are transforming the investment industry. Blackstone will need to embrace these technologies and leverage them to enhance its investment processes and create new opportunities. The firm has outlined several strategic priorities to capitalize on emerging trends and drive future growth. Blackstone is actively seeking to expand its presence in emerging markets. Here, they are specifically looking at Asia and Latin America. The firm is focusing on investing in sectors with strong growth potential such as technology, healthcare, and renewable energy. Blackstone is developing new investment products and strategies to meet the evolving needs of its investors, and it is committed to integrating ESG factors into its investment processes and decision-making. While the future holds significant opportunities for Blackstone, there are also potential risks to consider. A global economic recession or financial crisis could adversely impact the performance of Blackstone's investments. Rising geopolitical tensions and trade conflicts could disrupt global markets and create uncertainty for investors. Any negative publicity or controversy surrounding the firm could damage its brand and investor confidence. Mitigating these potential risk factors is a part of Blackstone's management strategy. One of the most pressing questions facing Blackstone is the succession plan for Stephen A. Schwarzman. While Schwarzman has not announced any plans to step down, the firm has been grooming potential successors. Most notably, it includes John Gray, the firm's president and chief operating officer. A smooth transition of leadership will be crucial to ensure Blackstone's continued success in the years to come. While Blackstone's future outlook is bright, it is not without its challenges. The firm's ability to adapt to challenging market conditions, navigate regulatory hurdles, and address ESG concerns will be critical to its continued success. With a strong leadership team, a diversified portfolio, and a commitment to innovation, Blackstone is well positioned to thrive in the dynamic and ever-evolving world of global finance. As Blackstone charts its course into the future, one thing is certain: the firm's legacy will continue to be defined by its commitment to excellence, innovation, and creating lasting value for its investors and stakeholders. Whether it's through groundbreaking deals, transformative investments, or philanthropic initiatives, Blackstone's impact on the world of finance and beyond is sure to endure for generations to come.